strategy that enables them to meet the needs of a more diversified market, increasing their customer base. When it comes to financials, Sanchez has a strong financial health and performance. So I'd like us to dive deeper into their financials. Looking at a current price of 35 pesos, they have a market cap of 2.74 billion and a dividend yield of 8.55%. They have an intrinsic value of 22 cedis, 9 pesos, and this is higher than their current price of 35 pesos, indicating that Sanchez is undervalued. They are also performing well on the market with a year-to-trade of 24.77%, with a year high of 35 pesos and a year low of 31 pesos. They also have a beta of 1.52, which is higher than 1, indicating that they are more volatile than the broader market, which means that the stock is moving very fast. They have an issued shares of 134.76 million, an annual dividend of 1.74, a price to book ratio of 1.8, a PE ratio of 5.3, which indicates that investors are expecting a lot from Sanchez. They also have a book value of 12.09 and a payout ratio of 45%. They started the year by trading at 16 cities, 31 pesos, and they are currently trading at 20 cities, 35 pesos, which is about 24.77% higher. This means that they are trading at 1.7 times higher than their book value. And when you also look at their capital adequacy ratio over the years, it has been very, very high. And this is higher than the regulatory minimum requirements of 10%. They also have a return on assets in 2018 being 9%, 2019 being 11%, and 2020 being 18%. Their financial leverage ratio is also very good, 2018 being 9.5%. 2019 being 8.4% and 2020 being 6.7%. Their profits before tax is also very significantly high, with 2018 being 325.9 million, 2019 424.2 million, and 2020 675.4 million. So looking further into the financial highlights of Sanchez, Sanchez has been growing over the years. They recorded a high percentage growth in 5 years, the highest percentage growth in 5 years, with their revenue growth rate being 10.15, their earnings per share growth being 0.99, and over the 5 years being 59.68, and their book value growth being 30.54, and their net profit margin over 5 years being 30.26. Their margins is also very good, with the net profit margin being 47.94, operating margin 54.68, pre-tax margin being 54.68, and their free operating cash flow being 49.14, and their net profit margin being 36.87. And when we also look at their income statements and their balance sheet is very capitalized, and their income statement is also very liquid. So we can see that their operating expenses has increased over time, and in 2018 it increased from 286.3 million in 2018 to 329 million in 2019, and this was as a result of the increase in investments in technologies and other marketing activities. And we can also see that their impairment provision also decreased by percentage points from 100.8 to a 99.9 million, and this was as a result of the strong recovery strategies which were implemented by the bank. And we can also see that their fixed income has also been good over time, has increased significantly over time. And this was as a result of the online fixed income platform which was introduced. So the online fixed income platform accounts for about 54% of their total fixed income. And what the online fixed income platform did was that it increased Sanchez reach, and it gave them a deep customer base, increasing their revenue and their earnings. So I'd also like us to go through the industrial market competitors. So Sanchez has a lot of competitors such as Societe Generale, Access Bank, and EcoBank. So we are going to go through the financials of each of these competitors to see how Sanchez is ahead of them. So Sanchez has the highest market cap of 2.7 billion. Societe Generale has 851 million. Access Bank 547.9 and EcoBank 2.52. Sanchez also has the highest price in earnings being 5.3. They also have the highest price to cash flow being 4.9. Their return equity is also the highest with 31%. Their book value is also significantly higher than their competitors. Their dividend yield is also significantly good, just that Societe Generale has a higher dividend yield than Snapchat. Their debt equity too is averagely good, being 12.8%, and their earnings per share is also higher than their competitors. So you would also ask, what makes Snapchat different from all these competitors? The first point is their client focus. Snapchat focuses on their clients. They've developed a strong relationship with their clients over the years, providing trust, advice, and the best products and services to their clients. And the next point is also their distinct propositions. So Snapchat combines this local expertise to their international expertise, providing superior proportions for their clients. And the third point will be their robust risk management. So with the risk management approach that Snapchat has, it helps them to have a higher sustainable income. So SC is where you have all your transactions done seamlessly without any problems. From a technology standpoint, there are lots of differences in the way different clients from different regions are supported. Diversity is one of the bank's greatest strengths. They are able to provide a superior customer experience which suits the unique needs of each region. So looking at the financial strength of Snapchat, you can also see that their revenue has increased over time, and their earnings per share has also increased over time. Their earnings have grown significantly by 26.5% per year over the past 5 years. Their earnings growth over the past year being 45.3% exceeds its 5-year average, which is 26.5%. Their return on equity is also forecasted to be high in the next 3 years. Their dividend payment has increased over the past 10 years, and it has also been stable. They provide about 23% of their total income as dividends to shareholders. And Snapchat is also the 14th most traded stock on the Ghana Stock Exchange. So let us also go through the SWOT analysis of Snapchat. So with their strength, one of their strengths is that they are pivoting towards being a more digital, agile, and modern bank. They also offer superior customer and developer experience, and they are one of the banks that provides the needs of a diversified market. Their weakness is that they are restricted to a specific target market when it comes to their mobile banking. They have the opportunity 2030, and the threat being an uncertain market conditions. They also have a good management team. It's mixed with expertise, different skills, and so I would recommend Snapchat. Snapchat is a solid bank, and I would recommend it as a buy or hold company because of its high quality earnings. And it also has a strong competitive advantage over its banking institutions in the industry. The current price target of Snapchat is 25 cedis, predicted over a period of 3 years. ST will continually perform well in the market and should be bought at a share price of 20 cedis, 35 pesos. Thank you.